This is your accounting in the books of lessee. One homework today, and with all your efforts you will try to do it. Another very important part of this chapter is sub-lease accounting. Sub-lease. What is sub-lease? Suppose this is A Limited, B Limited, C Limited. A Limited gives asset to B Limited on lease. This is head lease, main lease. Then B Limited gives the asset on lease to C. This is called sub-lease. This is sub-lease. What is the role of B Limited here? B Limited has a double role. Have you seen any movie with double role? Which movie has double role? Anybody? Any movie which has double role of somebody? So B has a double role. Example. Which movie has double role? Okay, forget. So B Limited is playing double role. He is a lessee and he is also a lessor. He is a lessee also, he is a lessor also. With respect to head lease, he is a lessee, and with respect to sublease, he is a lessor. So now you have to mix both the accounting. You have to mix both the accounting and accordingly decide the accounting entry in the books of B. Question will be in the books of B. A is a lessor. So whatever we have learnt for lessor, apply in the books of A. C is a lessee. As a lessee, whatever we have learnt in the last 3 days, 4 days, you have to apply. But you have to now learn how to do accounting in the books of B. That will depend on what kind of lease is that. Okay, A has given asset to B on lease. So you have to see whether B has taken short-term lease exemption or not, whether B has taken low value lease exemption or not, or whether B Limited is accounting by applying normal provisions of Ind AS 116 without taking the low asset value or low short-term lease exemption. Then you have to see the arrangement between B and C also here, whether this B and C arrangement, because now B is a lessor, you have to check whether it is finance lease or whether it is operating lease. Between B and C, B is a lessor, so lessor will have to decide finance lease or operating lease. So I hope you have got some idea. We are in the books of B. B is a lessee for the head lease, B is the lessor for the main lease. How will B pass the entry depends on how is the head lease arranged and how is the sub lease arranged, and accordingly will pass the entry. So entries can vary depending upon the type of agreement between the head lease, in the head lease and in the sub lease. I have written all the points in your book. Listen to me very carefully. Our topic is sub-lease. How the entry will be passed by the intermediate lessee who is also a lessor. Original lease agreement is called head lease. A, B, C. This arrangement is called head lease. Following points we will take care of while solving. Compare lease term of head lease with sub-lease. That is, what is the lease term for head lease and what is the lease term for sub-lease. Compare the two. If substantially sub-lease is equal to head lease period, if substantially, again they have used the word substantially, but it is not properly defined in the standard. That means if head lease is suppose 5 year and sub-lease is suppose 4 year or 5 year, then they are substantially equal. Then sub-lease is accounted on the same classification as head lease. Sub-lease will be accounted on the same classification as head lease. First point, look at the lease term. Okay, for the head lease, look at the lease term for the sub-lease. Now head lease, suppose exemption is availed. In head lease, suppose you have taken the exemption, two exemptions you can choose from if applicable. One is low value asset exemption. When the value of the asset is low, then you can simply transfer the lease rental to P&L account without creating ROU asset and lease liability. And second, if the lease term is for short period, then sub-lease will be operating lease. If you have taken exemption for accounting of head lease, then sub-lease will be an operating lease. Then the answer is easy. For the main lease also, you are taking exemption, so lease payment will go to P&L account. In sub-lease, lease income received will be transferred to P&L account. So one entry for lease payment, one entry for lease income, both will go to profit and loss account. This is my first possibility. Second possibility is that head lease and sub-lease do not have substantially same lease term. Head lease term is 10 year, sub-lease term is 1 year, 2 year, 3 year. Then always the sub-lease will be treated as operating lease. When the lease term of head lease and sub-lease are substantially different, then sub-lease will be treated as operating lease. And if it is treated as operating lease, life is easy. You just have to transfer the rental to the P&L account, transfer the rental income to P&L account on a straight line basis. Third possibility, the lease term of head lease and sub-lease are same and you have not availed exemption, because if you avail exemption for head lease, operating lease, lease term are not substantially equal, operating lease. You have not availed exemption and the lease term for head lease and sub-lease are substantially same, You can use the word here substantially, and here also you use the word substantially. Are not substantially same in the previous note and substantially same in this note, then it is a finance lease. So first my task is to identify what will be the category of sub-lease. I repeat, if you have availed exemption for the head lease, either small value exemption or short term exemption, sub-lease will be operating lease. If the lease term of head lease and sub-lease are not substantially same, sub-lease will be operating lease. If you have not availed exemption, lease term of head lease and sub-lease are substantially equal, then it will be finance lease. Now come to the next point. If the sub-lease is an operating lease, life is easy. If sub-lease is an operating lease, then consider lease rental of sub-lease as income. Whatever you receive, suppose you have taken this premise for 10 years, for 3 months in a year you give it on rent, because for 3 months you may not require it. Whatever income you receive, follow simple accounting, treat it as income. No change in the accounting of the head lease. Accounting of the head lease continues as it is. Accounting of the head lease will continue as it is. So that is also easy. Now the only complicated part is if sub-lease is finance lease. If sub-lease is finance lease, A, B, C, we are in the books of B. So in the books of B, for the head lease, they must have recorded an asset, ROU asset to lease liability. Okay, these are the two accounts appearing in their books before the asset was given on sublease. Now the asset is given on sublease and it is a finance lease. You are not using the asset, so you will derecognize ROU asset, and in place of that you are going to recognize lease receivable to ROU asset, lease receivable to ROU asset, lease receivable to ROU asset. So ROU asset will be derecognized, and in place of that lease receivable account will come. Then you will have to every year, as far as lease liability is concerned, you will have to provide for finance charge. As far as lease receivable is concerned, you will provide for finance income, and then you will receive the payment, you will make the payment, receive the payment, make the payment, also recognize finance income on sublease and finance cost on the head lease. What about depreciation? Can you answer? Will you provide depreciation in case of sublease being finance lease? My question to all the intelligent students sitting out there, will you provide depreciation on ROU asset? The answer is no. Sir, why no? Most of you said no, all of you said no. Why no? Why no? Because that asset is derecognized. Asset doesn't exist. Very good answer. When the asset doesn't exist, you will not provide depreciation also on that. So if you understand conceptually, you won't make mistake. Now what is the status? B has got two relationships. One is with respect to A, which is head lease. So it has an obligation to pay lease rental here, and it has got a sub-lessee here. So it has a right to receive lease rental. So receive lease rental, pay lease rental, and this lease rental will have to be bifurcated into two components: finance cost and reduction in lease liability, finance income and reduction in lease receivable. No need to provide depreciation. If you can understand this, you have understood this chapter. Then I can proudly say that you have understood this chapter. So see the journal entry. When you will give the asset on finance lease under a sub-lease arrangement, you will recognize lease receivable. How to compute this amount we have discussed. We have taken one question also before this today. We have given one homework also to you before this today. I hope you will do homework today and you will not go into sleep mode. Okay. To ROU asset account. So ROU asset will be derecognized, being asset replaced. Remaining accounting will continue as it is. Remaining accounting will continue as it is means you are going to provide for finance cost. You are going to receive finance income also. So those accounting will continue as it is, but we will not provide depreciation. So now I am going to take a very important question which will cover all the aspect of this sublease all three cases we are going to take, it will be easier for you to understand. On 1/4/2019, ASF Limited obtained a machine on lease. The lease rental was rupees 10,000 per annum, payable at the end of the year. The term of the lease is 5 years. Term of the lease is 5 years. Head lease is 5 year. Incremental borrowing rate is 10%. Incremental borrowing rate is 10%. For the head lease, I am going to do accounting using this data. This is head lease, main lease, original contract we have entered. But then what happened on 1/4/2020? 1/4/2020, after 1 year, ASF Limited subleases the machine to B Limited for 4 years. Sublease is 4 year. Main lease is 5 year. 4 by 5, 80%. Now this is a very judgmental issue, whether the sublease term is substantially equal to head lease term. So we will assume both and solve. If we assume it is substantially same, it is finance lease and we'll do that accounting. If we assume it is substantially not same, we will treat it as operating lease. Case 1. Case 1 is lease rental on sublease is 10,000 and incremental borrowing rate is also 10%. Very easy. Case 2. Lease rental on sublease is 12,000. See your business. You have taken the asset on lease for 10,000 and now you are giving it to the sublessee for 12,000. But for the sublease, the incremental borrowing rate is now 11%. So we are going to take in case 2 the interest rate on sublease at 11% and interest rate on head lease in case 2 will be at 10%. Third is lease rental on sublease is rupees 12,000. Lease term is 1 year. Lease term is 1 year. 1 year versus 5 year. I have to take total period. Total period in head lease 5 year. Total period in sublease 1 year. Okay. Which means I cannot say it is a substantially same period because 1 by 5 means only 20%. Incremental borrowing rate is 11%. So in the first and second case, I will assume that the lease term under both the leases are substantially same and we are going to follow finance lease accounting in case of sublease, finance lease accounting. Whereas in the last case, it is clear that the lease term is not substantially same and therefore in the last case we will treat it as operating lease. So this will give you an idea what will you do if the sublease is treated as finance lease or if the sublease is treated as operating lease. So one question will cover your understanding of accounting of subleases. While computing the number of years, for comparison, look at the total period, 5 year, 4 year. Some of you can say, out of this 5 year, 1 year is over, so I should compare 4 versus 4. No, you have to compare total 5 year with total 4 years. That way you will compare for checking whether lease term is substantially the same or not. Okay, total 5 year versus total 4 year. Do not take into account or do not think about how many years have got completed. Case 1. Are you ready for this amazing and wonderful question? Step 1. Calculation of lease liability. First I will have to also learn how to account for main lease. We are lessee for the head lease. Calculation of lease liability for head lease on commencement. Question in front of you. The head lease rental is 10,000 per annum, payable at the end, lease term is 5 years, incremental borrowing rate is 10%. So combine these numbers, you will get lease liability at the beginning, at the commencement, 10,000 into PV annuity factor 10%, 5 year. On your calculator, first you compute the annuity factor and multiply by 10,000. You will surely get 37,908. Please confirm, have you got 37,908? So my first step would be to find lease liability in the case of head lease. In year 1, there is no sublease. Sublease will start in year 2. First year will pass normal entries in the books of lessee. First year will pass normal entry in the books of lessee. First year there is no issue of sublease. Please tell me the journal entry on 1/4/19. Come on, journal entry on 1/4/19. ROU asset account debit, same amount because there is no other adjustment. There is no advance rent, there is no initial direct cost, there is no decommissioning obligation, there is no lease incentive. Therefore, it will be same. ROU asset account debit to lease liability account 37,908, and then on 31st March 2020 we are going to provide depreciation on ROU asset. Lease term is 5 years, divide by 5. Depreciation is equal to, come on, depreciation equal to 7582. Very good. 2 ROU asset 7582. Finance cost account debit. Finance cost account debit. Now we are going to record finance cost on the lease liability at 10%. How much is that? That is equal to 3791. How much payment we are going to receive or make? We are going to pay 10,000. We are going to pay 10,000. Out of that 10,000, 3791 is towards finance cost. It has got two components, finance cost and reduction in lease liability. So can you tell me how much would be reduction in the lease liability? Or first we can accrue and then we can make the payment. Both are okay. Suppose you want to combine these two entries. Suppose you want to combine the last two entries. Then your entry would be finance cost debit 3791, lease liability debit, difference between 10,000 and 3791 to bank. So somebody can pass one single common entry for the last two cases. Both are okay. First you accrue the interest, then you make the payment, or in the same installment you can bifurcate between finance cost and reduction in lease liability. This is year 1. No problem in year 1. Now let us compute the book value of the ROU asset so that we will have in our mind when we will do the subsequent accounting. I will know what is my ROU asset at the beginning of year 2. So this is 302,30326 after deducting depreciation. After deducting depreciation, and you also tell me one more thing. What is my book value of lease liability on 1st or 31st March 2020, or you can say 1st April 2020? Anybody answer? Please reply. What is the book value of lease liability at the end of year 1? That is equal to 37908 opening balance plus interest accrued 3791 minus lease payment 10,000. The student is saying 31699. Very good answer. Amazing. You people are genius. So this is my story of year 1. Entries I have passed, balance I have written. But what happened at the beginning of year 2 on 1/4/2020? On 1/4/2020, ASF Limited subleases the machine for 4 years, and there are 3 cases. So accordingly we'll have to solve. So I have written a note for you. Just read the note. On 1st April 2020, ASF has subleased the asset. What is the status now? Lessor. ASF is lessor. The lease term is 4 year. Original lease term 5 year. 4 versus 5 means 80%. Even 80% can be assumed to be substantially the same. So we can assume that the sublease is having same lease term, substantially same as head lease, and we are happy to account it as finance lease. So once I say it is a finance lease, then I will have to recognize lease receivable. Lease receivable in this problem is very simple. You are going to receive, in the first case, case 1, 10,000 rupees per annum for 4 years, and the incremental borrowing rate is 10%. So please calculate lease receivable for sublease in case 1, lease receivable for sublease in case number 1. Can you please compute and give me the answer? Can you compute? Yes, 31699 is right. 31699 is right. Very good. And now what entry we are going to pass on 1/4/2020? We will recognize lease receivable because we are lessor, and we are going to derecognize. We are going to derecognize. Which asset I am going to derecognize? Which asset I am going to derecognize? Which asset I am going to derecognize? I am going to derecognize ROU asset because the same asset is now given on sublease. So 30326 is the book value already computed above. Oh my God, this is not telling. This is not telling. So what should I do? I will transfer the difference to profit and loss account under the heading profit on sublease. To profit on sublease, this is your profit. You have transferred an asset of 30326 for 31699. So therefore there is a profit. Write down 1373 profit on sublease, being asset subleased. This is 1/4/2020. Now what will happen on 31st March 2021? On 31st March 2021, on one hand we have to make payment to the lessor under head lease, and we have to receive payment from the lessee under the sublease. We have to recognize finance cost on the head lease and finance income under the sublease. Okay, so let us write journal entry on 31st March 2021. We are going to receive from sublessee under sublease 10,000 rupees, and I will transfer 10% of what was lease receivable, 31,699. 10% of 31,699 will be treated as finance income, round off 3170. And what about the balance? Which account you are going to credit for the balance? Any answer? Which account you are going to credit? Which account you are going to credit for the balance amount? Which account you are going to credit? You are going to credit lease receivable. So lease receivable balance will reduce. Very good answer. Lease receivable. It should be called lease receivable, being lease rental received. And you will pass one similar entry for the lease payment under the head lease. On the same date, lease liability account debit 10,000, 6830, because I am going to pass one entry only. finance cost 3170 to bank account 10,000. How this finance cost has come 3170? You have an opening balance of 31699 into 10%, and this lease liability you can put it as a balancing figure. Out of 10,000, 3170 is finance cost, so the reduction in the lease liability would be 6830. Then I have given you a note, no confusion at a future stage why depreciation is not charged. The answer for that is depreciation is not charged because ROU asset has been derecognized. Now I will go to case 2. Case 2 is similar to case 1. This is also finance lease. To save your time, energy, efforts, one note is enough. Step 1, step 2, step 3 and step 4 will remain same. Then what will change? The lease receivable amount will change. The lease receivable amount will change because now the lease rental is 12,000 and the incremental borrowing rate is 11%. So I will use lease rental of 12,000, incremental borrowing rate 11%, remaining discussion remains the same. So please compute the present value of 12,000. I am waiting for your answer. What will be lease receivable under case 2? Student have replied 37,229. Very good, amazing. 37,229 is the right answer. What entry we are going to pass now on 1/4/2020? We will bring lease receivable in the books at 37,229. We are going to derecognize ROU asset at book value 30,326, but there is a difference. That difference will be transferred to which account? The difference is transferred to which account? Come on, quickly. Difference is transferred to profit and loss account, being profit on sub-lease. 7003. 7003. Check the answer. Is it right now? Is this right now? Okay. Now we are going to record entries on 31st March 2021. On this 37,229, we are going to receive interest at the rate 11%. We are going to receive total 12,000. So 12,000 minus finance income will go towards reducing the lease receivable. Okay, one student is saying this is not correct. Let me check. I also have got a calculator which is not on lease. 37,229 minus 30,326. Wait a minute, my calculator is not working. Sometimes it happens, not every time. Don't think it is a bad calculator. 6903 is right. I appreciate your efforts for providing correct figure. 6903 is right. You are right, 6903. Now write down journal entry on 31st March 2021. Bank account debit. First we'll receive 12,000 rupees. Out of that we will transfer 11% of 37,229 to finance income. Please check the calculation. Good, you calculated. 4095. Is it right? And remaining amount lease receivable. Remaining amount lease receivable. Come on, student. 7905. Very good. Being lease rental received on sublease. And now we are going to pass entry for lease payment on head lease. Lease liability account debit finance cost, this entry will be same as previous problem, previous case 1, because head lease accounting will not change. There I am going to pay 10,000, interest rate 10%. So same numbers. Do not spend your energy on accounting of the head lease, being rent paid on head lease. Is the answer same? Is the answer right? Okay, that was my case 2. What about case 3? Case 3 is an operating lease problem. Step 1, step 2 will remain same. And what about sublease? I will just write a note that the head lease term is 5 years, sublease term is 1 year. They are not substantially the same. Therefore, sublease will be treated as operating lease, and if it is operating lease, there is no need to record lease receivable account. There is no need to derecognize ROU asset. Whenever you will receive the lease payment from the sublessee, you are going to transfer it to profit and loss account, and the accounting of the head lease, the main lease, will not change at all. On the main lease or head lease, you will continue to provide depreciation also. Why you will continue to provide depreciation on the head lease? Because I am not going to derecognize ROU asset. Very good. So lease rental received will be recognized as income. Accounting of head lease continues. Let us see what happens in year 2. In year 2, my head lease accounting will not change, and the numbers are also same for year 2. I am not asking you anything, just copy paste from the previous case 2. Lease liability account debit 6830, finance cost account debit 3170 to bank account 10,000, and you are also provide depreciation, don't forget. This will continue as it is. Do you remember depreciation in head lease? Go to your step 1 when you started the answer. Depreciation was head lease 7582. Can you see that? Can you see that in your step 1? 7582. Very good. And then you will receive income from sublessee, bank account debit 12,000 to P&L account. Directly P&L account, you can write income, rental income, and that rental income will ultimately be transferred to P&L account, being rent received on sublease. So this was a wonderful question on sublease. We have covered all 3 possibilities: finance lease, operating lease. Under finance lease, if the incremental borrowing rate is different, that also we have covered. Now whatever questions you will be asked will be around this only. So don't worry, you will be able to solve question on sublease. Did you enjoy? Say yes. Okay. Now write down few homework on sublease. Okay.